Hi everyone, it's one of the questions we hear most from our Bizlen clients. What is the investment capital for a foreign invested business in Vietnam? So first of all, let's find out what is the capital investment and why is it needed. The capital investment is an amount of money put into your company which can be spent on the setup and operational costs of your business. When you register your company, the DPI, Department of Planning and Investment, require you to commit a certain amount of money which matches your business plans, and also you need to contribute it to your business. Both Vietnamese nationals and foreigners must follow these rules. However, in practice, the authorities are less strict for Vietnamese-owned companies.
It is important to mention that there are two types of capital requirements. One is related to your visa and your temporary residence card, TRC, and the other one is related to the approval of your investment project and the registration of your company. Let's start with the visa capital requirements. As from the 1st of July 2020, the maximum duration of your investment visa or your investment temporary residence card, TRC, is directly linked to the amount of your investment capital in Vietnam. Meaning that any investment amount of under 3 billion Vietnam dong will allow you to obtain a so-called DT4 visa with a maximum extendable duration of 1 year. An investment of between 3 billion Vietnam dong and 50 billion Vietnam dong will allow you to obtain a so-called DT3 visa and a DT3 temporary residence card with an extendable maximum duration of 3 years. These rules apply anywhere in Vietnam. And if you want to see and hear more about the new visa rules in Vietnam, please have a look at our previous video about this topic.
Next is the business registration capital requirements. This second category of capital requirements relates to the approval of your business plans. We advise all our clients that the authorities want to see that you're serious in your business plans and that your proposed capital investment can support your company for at least 6 months to 1 year. Ultimately, this leaves the investment authorities with quite some room for discretion, and they can decide whether your proposed investment capital is sufficient or not, which has led to different cities or provinces applying for different practical policies. So there are no black and white rules, other than some exceptions. For example, the investment capital for a real estate business is around $800,000, and for a security company, it's around $1 million US. Bizlen has lots of experience with foreign company registrations all around Vietnam, so we know very well the trends of the minimum capital requirements for each different cities. For example, the minimum capital requirements for Hanoi and Ho Chi Minh City are a little bit more flexible, are between $10,000 and $15,000 US. So in summary, for a higher approval rate, your proposed investment capital should be proportionate to your business plans. It can also make a difference to present modest initial business plans, and then you can expand later. Also, just to debunk a local myth, your investment capital will not be locked into your company during the lifetime of your business.
How to contribute your capital in Vietnam? The capital contribution procedure consists of 2 steps. Step 1. Before you register your company, you have to show to the investment authorities that you have sufficient financial means in your personal bank account. Now, you can use a personal bank account in your home country for this purpose, but in that case, your bank statement will need to be legalized by the Vietnamese embassy or the Vietnamese consulate in your home country. So practically speaking, it is often much easier to use a local Vietnamese bank account for this purpose. If you do not have one already, then we can help you to open one at our partner bank in Vietnam. Step 2. After you have completed your company registration, you have 90 days to transfer the committed investment amount from your personal bank account to your newly opened company bank account.
The next question is, can you take your investment capital out in cash? Well, as you already know, you have to put the investment capital into your company bank account first. But as well as your bank account, your bank reserve, you will also have a cash reserve. And you can use both the bank reserve and the cash reserve to spend on your business expenses. Also, it's fairly straightforward to move your company funds from the bank reserve to your cash reserve.
Now, what to do if you don't have the required investment capital? It is actually one of the biggest obstacles for our foreign clients who want to register a foreign-owned company in Vietnam. the high capital requirements. Now, we do have some solutions for that. One of them is to obtain a short-term loan. Or alternatively, we can connect you with a so-called angel investor who can join you on your investment project. Don't forget that we can support you anywhere in Vietnam, and even if you are still in your home country making plans of coming to Vietnam. So if you have any questions about doing business, registering a company, or making an investment in Vietnam, do not hesitate to contact us via one of the channels mentioned below.
Thanks for listening, we hope it helps and we'll see you next time.